On August 16th, 2022, the drastically reduced Build Back Better plan was signed into law by President Biden, now called the Inflation Reduction Act. I do know one thing, there isn't anything in here that is going to reduce inflation, but there are a couple of incentives in here that we can potentially take advantage of. The main focus of this bill was on three things. First, roughly $370 billion in clean energy investments and tax credits. More on that in a minute. Second, allowing negotiating of prices of some drugs for Medicare and capping out-of-pocket prescription drugs for those on Medicare at $2,000 effective in 2025. So if you're 65 or older and in need of significant amount of prescription drugs, you're most likely going to be happy. Third, it increases taxes on corporations making $1 billion or more of income while doubling the IRS budget by $80 million to help enforce it. Stick with me and I'll explain 5 potential tax benefits for you in this bill and what the increase in the IRS budget may mean for you. Hey, Colin Exelby here. I'm a certified financial planner professional with over 20 years of experience providing financial planning for business owners and their families that just makes sense. I own the financial advisory practice Celestial Wealth Management and provide advice virtually to clients all over the country. The nice thing about this bill for my family and probably yours is it clearly the target is large corporate businesses making $1 billion or more, not you and me. But you're living in a fantasy land if you don't think those large companies like Nike, Target, and Walmart aren't going to protect their profits and pass those increased costs on to us in the form of rising prices. When costs go up, prices go up. It's that simple, yet not often understood by lawmakers. There is $80 billion going to the IRS, roughly doubling the size of the IRS. Supposedly, this money will go to enforcement on these large corporations. Do you really think they're going to use that money to go after businesses with an army of lobbyists and huge accounting firms? No way. They are coming for middle America. Small businesses, entrepreneurs, influencers, and individuals that do well for themselves and provide jobs for the vast majority of Americans. But there are ways you can protect and prepare yourself. The number one way to protect yourself is document, document, document. I always talk about this with my clients and on my trainings. And in my next video, I'll give you ways to reduce the likelihood of getting an audit. Make sure you hit that like and subscribe button so you know when I release it. This is a perfect spot before I hit my 5 potential tax benefits for you to point out important disclosures. The information in this video is for educational purposes. This is not specific financial planning or investment advice. In addition, everyone's tax situation is different. You should discuss your tax situation with a qualified tax advisor before implementing any planning strategy. So what is in this bill for you and where can you benefit? As I said in the beginning, there is roughly $370 billion of clean energy investment, and a large portion of that is in tax credits. Tax credits are much more valuable than tax deductions because they directly reduce your taxes owed, not just reduce your taxable income. The first tax credit is the non-business energy tax credit on your home. If you're planning a few home improvements that will boost the energy efficiency of your house, you may save some money if you purchase something like a new air conditioning or heating unit. Kind of like the one I just had to purchase for my office after the electrical fire a few weeks back. Or new energy efficient windows, doors, or energy efficient appliances. Too bad the credit doesn't take effect until 2023. It used to be that you could only get $500 worth of credits over your lifetime and only $200 for windows. Now, starting in 2023, the credit is 30% of the cost for all eligible improvements made during the year, up to $1,200 of credits per year. There are some specific limits on items like doors and windows, and roofing and ceiling fans are no longer eligible. Make sure you're speaking with your tax preparer about any home improvements you make during the year so you get these credits. The second tax credit is what's called the Residential Clean Energy Credit. It's been around for a while, but was extended and improved. In 2022 and 2023, if you install solar, wind, or geothermal systems on your property, you get a 30% tax credit on what you spent. Not a 30% deduction, a 30% credit on taxes. If your solar install cost you $50,000, you receive $15,000 of tax credits. For someone in higher tax brackets, that is a big benefit and incentive. Not to mention the potential energy savings over time. Okay, now let's say you own a business and have a dedicated home office. Here comes tax break number 3. Let's say your home office makes up 15% of your total home square footage. You can take 15% of the cost of the solar installation and depreciate that over time, or potentially in an accelerated fashion, giving you an additional business tax deduction on top of the 30% tax credit. That is a nice bonus for people with a dedicated home office who choose to install solar, wind, or geothermal at their home. The fourth tax credit is exclusively for business owners. There is now a $7,500 commercial EV tax credit available for buying an EV less than 14,000 pounds, basically excluding only semi-trucks. There is no income restriction or manufacturer restriction. So if you have a car for your business, the government is paying you to buy an EV. The fifth and final tax credit is the expansion of the personal electrical vehicle credit. But I must warn you, there are a lot of limits here. I could do an entire video on it. Maybe I will. Starting in 2023, you now receive $7,500 for a new electric vehicle, no matter the make and model, as long as it is assembled in America, and $4,000 for a used one. I'll provide a link to the 20 EVs that qualify now down in the notes. However, there is an important catch. In 2022, there is no income cap. But now that the credit was raised, there is an income cap on receiving the credit starting in 2023. You must make less than $300K of joint and $150K of single for the new car credit, and $150K joint or $75K single on the used car credit. If you buy an EV in 2022, you still have a limit where the credit is only for companies that haven't sold 200,000 EVs. No Tesla, no GM, or Toyotas, and at the time of filming, Ford is very close. But you don't have that income limit. So if you are a high income earner and we're looking at buying an EV in 2023, you may want to speed up your purchase to 2022 if you can even find one. Also, in 2023, there is a new MSRP limit that goes into effect, so the credit is only for cars that are less than $55K for new cars and $80K for pickups. So it incentivizes more affordable EV production. The other thing to consider here is that while this is a great incentive, demand for EVs is very high and supply chain issues have inventory very low. There are long wait lists, so it's very hard to actually buy an EV to get the credit. It might make sense to get on a wait list now to take advantage in 2023. Because if you sign an agreement to be on a wait list in 2022 and it gets delivered next year, you get to choose which rules apply to you. That's great. I hope this helped you get a handle on what the Inflation Reduction Act really means. In my opinion, it may actually increase inflation. And make sure you watch these videos next to build your wealth in a way that just makes sense. Get clear, be clear.